we've got a lot of questions coming through here, so we'll do our best to answer as many of them as we can. Okay, so Paul, I think the first one is for you. If an employer only gets to include some of their employees in the group pension scheme, which I presume is the company policy, that there's certain criteria to meet to be eligible for the company scheme, will NAERSA attempt to auto-enroll those employees starting in 2026?
So I suppose to answer this, NAERSA will enroll eligible employees that aren't making pension contributions. It's really that simple. They'll be using the revenue payroll data submitted uh, to them to I suppose to check the eligibility, and if they meet the earnings, the age, and uh, the not having a pension contribution, they'll be enrolled. Now, it might sound like extra work, I suppose, for employers, other than setting up the your profile and making sure that you've got a payment method set up so that NERSA can deduct those contributions. That's really it. But yeah, if you're operating waiting periods, if you have other criteria, then it's very likely you'll have staff enrolled into My Future Fund.
So to be prepared, I suppose the key is to have everybody in the scheme before January if they want to avoid auto enrollment. Otherwise, they're into auto enrollment. Okay, so the next one, if you have a new employee that joins the company and at that point they've already earned 80,000 euro in the year, is there a cost to the new employer for the remainder of the year?
If they've already been enrolled in My Future Fund while earning that money, then no, their earnings are stopped at, or the contributions are stopped at 80,000.
So when you go into the next year, then they start again on
Yeah,
the 1.5%.
yeah. And I suppose just to explain a little on how that works, it's once they breach the 80,000. So you could have a situation whereby we'll say someone has earned 79,000 up to September, and then in the September pay run, they're due to be paid 5,000. They'll contributions will be owed on the full 5,000, but then after that point, there'll be no more contributions owed. So it might be a case that employers want to manage payroll in a different way to give a supplementary 1,000 euro payment, in that sort of case, so that it stops exactly at 80,000.
Mhm.
Because otherwise, it's once that threshold's breached. So I think it's an important point for employers to know.
Okay. Jen, one for you, I think. What will the notification process be for eligibility of auto enrollment, and will it be similar to RPNs with Ross?
Yes, so it will be similar. We will be downloading via an API to the payroll software an APN file. I actually tested this last night because I'm working with the body that's working on it, and it's very seamless. And the notifications will come down and notify you of who has to be auto enrolled. So we need to apply those instructions to be compliant with the NAERSA guidelines.
And when is it likely that the payroll or the portal will be available?
They're saying that it'll be available from December to register all your employees, and then so if you run a payroll before Christmas, if you're a weekly payroll, you'll be able to download the APNs in that December payroll one for the January go live.
And will employers be notified of that once it's available?
I'm assuming that they will be notified by NAERSA. Yeah, yeah, yeah.
Okay.
Yeah, if I
Just,
can.
just, just to add to that, I know that you were saying, Jen, that you could have to register your employees, but they will appear in a list on your
No,
portal.
no, register the employer. The employer needs to register to get the
They
APN.
need,
Sorry,
yeah,
not the employees. Yeah, yeah,
yeah. So they
yeah,
need to complete their profile. The
yeah,
employer will have to complete their profile, set up their payment method, and then run their payroll as usual. As you mentioned, the AEPN.
yeah.
So yeah, it will be available in early December, and that will be communicated out to people as and there's many ways that we can get it out to people that it's live. So
It'll be on
yeah,
buses, I'm sure, and all sorts.
exactly. Yeah, yeah. Anywhere we can get it out to you, we will. Yeah, yeah. Unless you want to
Okay.
add anything there, Paul.
No, that's exactly it.
Yeah.
Okay. The next one then is, have the investment managers received any instruction on the types of investments allowed? For example, are ESG criteria applied to the investment funds management?
So I think that in the ledge there is provision for ESG, and that's at the the board is going to be overseeing all that. The actual investments that are going to be chosen, we're looking at UCIT investments. So we're very safe, very well regulated investments is what we're looking for. As civil servants and as government, we are relatively risk adverse on this. So we've gone for the safe option. It's not looking at sort of weird and wonderful speculative stuff. Like I say, UCITS, the three investment managers that have been chosen are extremely experienced in this space. Uh, so yeah.
Okay. Um, okay, so if an employee joins a company and has already earned 4,000, the new employer then pays them 1,000, and at the look, if you that's all over, I'm assuming over the 13-week look back period, which means that they're going to be eligible for auto enrollment. How is the contributions on the 4,000 that they've already earned going to be treated, or will it be paid by the first employer?
It,
Sorry, Paul.
no, go
So
ahead.
we're quick off the mark. No, just it's not being applied retrospectively.
Yep.
So it's only applied to the current payslip. So the 4,000 is used as a trigger, but you don't pay contributions on the 4,000 you've just got paid. So it's just from when you're enrolled, it's the contributions are calculated on the current payslip, not on the past payslip. So
Okay. If an employee is outside of key criteria, but they wish to opt into the scheme, is the onus on the employee to opt in via the portal, or do they approach the employer to process the opt-in?
It's the employee.
Employee.
They can go to the portal, they can contact NAERSA directly to look to opt in.
And that obviously applies to all employees. If they want to opt out,
It, it,
it's up to
yeah,
them.
exactly. And this again, this is sort of where the admin burden's really being picked up by NAERSA. As
Mhm.
an employer, you don't need to worry if someone wants to opt out or suspend or to opt in. Uh,
Or remind them.
or yeah, exactly. That's all going to be done through NAERSA,
Mhm.
and the employer will just get an updated AEPN with the correct information based on
Mhm.
employees' decisions.
and
Um,
just to add to that as well, once you're over 18 as well, you can't opt in if you're under 18. And then if you have pension coverage already in your payslip, you can't opt in either. You can't have a dual payslip, so a dual pension.
And if employees have questions, then is there somewhere that the employer can refer them to? Because I know it's walking a tightrope really on advising them on what to do in terms of auto enrollment, in terms of investment options, and whether to opt in and opt out. Is there somebody that they can be referred to?
Yeah,
Yeah.
there will be a contact center once the portal is live. There'll be a contact center live as well. There'll be a phone line for them to ring, or else they can email in their queries as well.
Okay. Okay, is there a continuing 13-week review to catch up if an employee's salary drops below the eligibility threshold? And if so, would they then be released from auto enrollment? For example, tutors or counsellors on payroll whose hours may fluctuate downwards, or maybe there may be seasonality applied to it.
So I think, like I said in the presentation, it's a trigger. Once uh, you're in unless you join another pension scheme through payroll. So we're not going to be uh, kicking people out of the scheme if their earnings drop below 20,000 euro a year. But just to note that, yeah, I mean in other respects, the 13 weeks is on a rolling basis. So if you haven't reached the threshold yet, we're going to keep looking at you. So it works. You look at 13 weeks, then you drop a week. You look at the next week. So you're always looking at those 13 weeks, the most up-to-date thing. But no, if someone's earnings drop below the 20,000 a year, they're not going to be, I suppose, unenrolled.
Okay, this next one is the one that comes up an awful lot. What about payments to directors that are made only once a year, but the director is actually registered as an employee and the submission is made to ROS? How are they treated for auto enrollment?
So I suppose once there's a pension contribution, with that, nurse is going to see that and they'll be exempted for 12 months. So in the case, yeah, if you've got a director that isn't on Class S PRSI, uh, then and they're being paid once a year and they're paying a pension contribution once a year. Nurse is only obviously going to see that once a year. So I mean, this is an example again, maybe of the 80,000 euro threshold. they might want to manage that. We'll say if they're paying themselves 150,000, because it works on once you've breached the threshold, they'll actually pay contributions on the full 150,000 if they're enrolled. But if there's a pension contribution, they're not going to be enrolled, and they'll be exempted for 12 months before NAERSA is going to go looking again at them as an employee.
So that would mean that they would need to have made a pension contribution in the 13 weeks leading into January,
Yeah,
and then
exactly.
they're auto enrolled. And it does, so then they don't need to be making regular pension payments.
No, no, but they need to check, I suppose, when they made it and make sure that the next one is sort of within the 12 months again. And it could be as simple as, if say if they paid it in July, they could pay €1 in, to
Yeah.
be honest, in, now, just to make sure that there's a pension payment on the revenue payroll data.
Okay. Okay, so if an employee has a private pension scheme, will they still be auto enrolled?
They'll be auto enrolled if their pension doesn't appear in their payslip. So yeah, they could have a personal being paid through the bank account, and that would be invisible to NAERSA. So
Hmm.
we would consider them as having no pension coverage.
Hmm.
So we wouldn't know whether they'd have it or not. So yes, they will be auto enrolled
So to avoid that, if that's what they wish, they should arrange for their pension payment to go
through their
through
payroll.
payroll.
Yeah,
Yeah.
yeah.
And if there's a pension scheme where there's only an employer contribution, will the employee be exempt?
Yeah. Currently, an employer contribution only will be considered as pension coverage, but that will change in the future. But
Okay.
currently, it's either or both.
Will employees who do not yet have a PPS number be auto enrolled?
I suppose if they don't have a PPSN, and we might need to get back to you on this one, but they presumably won't be reporting through revenue, because I think you need a PPSN with PMod to report through, and someone else might have a clearer idea on that. So no, but I wouldn't be definitive on that. And if that person wants to send that query into us on auto enrollment at welfare.ie, I think
Yeah.
we could probably get a fuller answer to them.
Okay.
Yeah, if they don't appear in the revenue data, we won't be able to enroll them. So, but I'm not sure how that works if you're waiting on a
Yeah, they'll
PPS.
go through with their address and the date of birth. So I don't know how that'll flag to NAERSA with no PPSN, but they will
Yeah.
go through the RPN file. They will go through the RPN's the POA submission.
Okay.
So they're
So yeah,
currently paying PRSI and all of that stuff
Yeah.
anyway.
But
Yeah.
so they'll need
So
to make a decision how they'll pick them up for the NAERSA website. Yeah.
yeah, but we can,
no,
if you want to send that into us, though, we can get it, as Paul said, definitive one.
Perfect.
Yeah.
Do all employees need to register on my future fund even if they're in the company pension scheme?
no. So I mean, to be perfectly honest, while it's probably important for employees to track their own pension on the portal, employees themselves don't actually need to do anything. And I'm sure there will be people that go all the way through and hit the age of 66 and get a lovely letter from NAERSA to say you've got all this money, and they never realized they were paying into it. Um, but yes, we'd say to them, go along to the portal and take a look, because that's where you're able to make choices. You'll need a verified MyGov ID to log into the portal. So it's just, I suppose, the process of getting that. And actually, it raises a bit of an interesting point for employers as well. What we'd also say is employers might think that they don't have anyone that's going to be enrolled. We'd suggest them that they go along and they register on the portal anyway. It's 5 minutes. It's not a long time, because you never know in the future. You could have edge cases where maybe someone doesn't go into your pension scheme for whatever reason, and we just want to make sure that, I suppose, that employers are compliant as much for their own sake, so that there's no extra hassle for them. So I'd say take the 5 minutes, go on, set up the payment method, even if you think all your employees are already going to be in a pension scheme.
Yeah, the multiple employments it would count, and the opt-in would count as well for that.
Yeah.
So they'd be better off, having a look themselves.
Okay. So this is another one actually that comes up an awful lot. If an employee gets auto enrolled, but then later decides to join the company pension scheme, um, how does the employer or the employee avoid a double pension deduction?
So, well, the truth is that there will be situations where there's
Mm.
overlapping contributions, because NAERSA can only exempt someone once they see a pension contribution coming in. but those pension contributions will be refundable to the employee and to the employer. It's the only case where the employer will get a pension or will get a contribution refund. That I suppose an erroneous enrollment, which we're not saying won't happen, but should be pretty limited. But yeah, if there are overlapping contributions, uh, both the employer and the employee will get a refund of those contributions.
And the funds go directly to the employer to reimburse the employee as well, is it?
No, so I think that was the process in the past. Now the employee will be able to go along and they'll be notified through their secure mailbox about it, but that probably best for them if they notice this is happening, they'll be able to go to along to NAERSA through the portal or call them up, and they'll be able to provide bank details so that NAERSA can reimburse them directly.
Okay, so then for seasonal workers or contractors, say for example a contractor does 6 week placement, and if you look back on that period, it would look like they're going to earn 20,000 for the year. Do they have to be auto enrolled, or is there any way around that, considering they won't be enrolled for, or they're not permanent employees?
No, they'll
Uh,
they'll, they'll be enrolled.
yeah.
Sorry, Lisa.
Yeah, no, but once they're not getting paid, then there's no comms to be paid after that. Do you know what I mean? But they will
Yeah.
remain enrolled. Yeah.
And
And
they
you,
can opt out after the 6 months and
the
get the
6 months, yeah. And they'll have to be tested for eligibility again after 2 years. And if they reach those thresholds again, so they will be auto enrolled, yeah.
And I
Or
suppose
re-enrolled, I suppose is a better word, yeah.
it's important just to say that the reason for that is one employer might look and say, well, their contracts are only for 6 weeks, but that person's could and presumably will go on to do other work, so they'll be enrolled anyway, and then when they slot into another job, they'll be up and running straight away. So it makes it as seamless as possible for the employees to be enrolled. So that's why we're not taking contract length and type into account. And sort of as Lisa said previously, they also have to consider the multiple employment angle where, an employer might think that their contractor's only working for them for 6 weeks. Sure, why would they be enrolled? They're not going to make 20,000 euro a year, but they could be working another job at the same time.
okay. I'm just conscious of time, and also conscious that there's an awful lot more questions. So we'll just try go through one or two more and answer the rest directly after the webinar. Okay, so the next one is where a person who is self-employed but also has part-time employment, will they be able to get auto-enrollment up to a maximum of 80,000 and also a pension contribution to the max of 115,000?
So, I mean, that depends on a couple of things. The only income that'll be assessable for auto enrollment will be their income through employment, not their self-employed income. That won't be assessable. Now, they can always opt in if they're making over 80,000 on, suppose on their employment, then yeah, it'll be up to that threshold. And auto enrollment doesn't have an effect on your pre-existing rights, and this goes maybe to the private pension someone might have, a personal pension someone might have through their own bank account. They can still get tax relief on that, so it'll work the same for someone that's self-employed. Nurse is not going to have sight of that self-employed pension contribution, so yeah, they can still claim the tax relief on that.
Okay. Okay, and just the last one then. What happens if the employee won't log on to the online portal to pick the risk profile of the pension?
They're put into a default strategy, and everyone's put into the default strategy to start. So unless you want to make a decision, you're going to be in that life cycle one that high risk growth early on, and as you get closer to retirement, it de-risks. And I suppose again that's been done because we know that there's not great financial literacy out there for most people. So we want to avoid forcing people into making what could be a complex financial decision. And the default fund sort of works in a way that people will still get a good sort of investment, good retirement pot at the end of it, without forcing them to make decisions. But of course, if they want to, they can always go onto the portal and they can choose between the three different risk strategies.
And just to add to that as well, it's not the portal isn't the only way to do you can also contact NAERSA. There'll be a matching process, a manual process also available for people who don't want to use the portal.
Okay, super. Thanks so much, Paul, Lisa, and Jennifer for your contribution this morning. Hopefully that was useful to the attendees, and apologies that we didn't get through all of the questions, but we'll do our best to respond to them after the webinar. And of course, if anybody wants more advice or assistance with communication strategies and implementation of auto enrollment, please feel free to reach out. And there's also some helplines that we'll share with the Department of Social Protection if you want to raise questions directly with Paul, Lisa, and their team. So thank you very much.